being able to have the opportunity to meet investors as humans, understanding their values, are they aligned with yours? All that stuff is really, really important in my book.
We are super, super excited for this Founder Fundamentals on this Thanksgiving week. We are also very grateful that Lolita is here today to share her insight and expertise about fundraising and investor dating and all of these various and interesting things. For those of you who may not be on Twitter, because if you are, Lolita needs no introduction, but she is an investor at the Community Fund and the co-founder of that fund as well. And also an operator working at Catalyte. She's been in the ecosystem for 15 plus years now, I want to say. And she's outspoken and fierce advocate for the underestimated in tech, and also just incredibly generous with her knowledge and her expertise in trying to pay it forward and encouraging founders to sort of bring their dreams into reality. Lolita, I'll let you introduce yourself as well.
Sounds good. Well, thank you, Rishi. I was just telling Rishi, thank you so much for all his work. He works like a madman behind the scenes to make all of your experience special, I'm sure. And I'm really glad to be here. I think, Rishi, you covered it. Right now, I'm investing in early stage founders that are leading community-driven companies. And the way that we define community-driven is there's really three big elements. One is a company that has customers that identify as members, where members have the space and the ability to create value for each other. And therein-forth, the third level, which is like basically starting that marketing sales flywheel, because there is this ecosystem and you want to keep bringing people in because you're either getting a problem solved or you're working towards your goal, whatever that may be. There's really, you could have community-driven companies in any sector. And a community-driven company can be actually where the product is the community, or it could be a product with a community around it. And it could be B2B or B2C. So I'll give you a couple examples. For a B2B company, it could be something like MongoDB, where you have technologists coming together and working as a community. From a B2C perspective, then you can think of something like a Peloton, where the bike itself is actually the product, but there's such a huge community around it that it makes it that much more valuable. One thing that we really believe is at the Community Fund is that it is companies that leverage community that will see these outsized returns. And one of the use cases that we think of is Airbnb and their valuation relative to BRBO, and the difference being the community centricity. So hopefully that helps you guys understand a little bit of background on the Community Fund. But as Rishi mentioned, I'm also an operator during the day. I'm actually head of sales for a Series A startup. So this year has been very interesting, also like in the front lines trying to figure stuff out. So when I talk to founders, I think I have the ability to have that empathy of like, yeah, I know it's rough, but we just have to keep going and get creative.
Yeah, definitely. I appreciate that context and that intro. We have a little bit of a deck that I'm going to throw on screen, and we'll just sort of, there's some guiding questions that we'll talk through. And then once we make it through the deck, I'm happy to just open it up. Excited for this conversation, and let's get into it. As soon as I can get my screen share up, we will be on our way. So sort of the premise for today's conversation was around like investor dating and picking the right partners, really, because your investors are people who are going to be on your cap table and in your lives, presumably if you're a founder, for if not your lifetime, at least that of your company. And we had a bit of an agenda that you guys can sort of see what we're going to cover. We already did this, so I guess we're 1/7 of the way through. Sixth, I count? No, sixth. We're 1/6 of the way through. But yeah, we'll zoom through this and just have this conversation. Here's a nice headshot. Again, the Community Fund and Catalyte, there's two hustles. And yeah, I guess maybe one question to start the conversation off is like, how should founders think about when and why to fundraise, and what constitutes like a reasonable decision on that front from an investor's lens, potentially, and maybe also a founder's lens?
Yeah, I think that's such a great question because there are times when founders just think like, I have an idea, let me go get money. And I just want to fund my idea without any specifics. And I think that it's really important to get as concrete as you can in terms of why are you raising? How is this money going to help you in achieving that next milestone? What is that next milestone? And then even digging a little bit deeper and asking yourself, is it time to bootstrap right now? Is it because that actually is not a bad thing, and bootstrapping doesn't necessarily mean you don't raise from venture capital, but it can allow you to have this organic space where you don't have that huge pressure of like, okay, I'm going to take capital and then I have to grow really fast, and you can feel things out. So I think definitely knowing why you're raising is really important from that level. Stepping back, I think everybody on this call is looking to build VC fundable companies. And we'll go through, I think, on the next slide, but we'll stick to this one for now. We'll go through like on peeling a layer further away, but being as concrete as you can about why you want to raise, what you're going to use it for, and what the outcome is going to be. In particular, if you can come around from a traction perspective, a revenue number, that's always going to be an investor's favorite answer. Um, yeah, bad answer would be like, just because, and I always hear this, if I just get marketing, we will just be a unicorn. And then the thing is that many of you will know that's not really true. It's true, marketing is very helpful. And you do need a very good sales team. And I am biased on this because I think every founder should also be a salesperson, by the way. But it's really important to kind of track that trajectory of milestones and gradual movement forward, because ideally what happens is you have we're right here in point A, you want to raise to get to point B, and then you know not just what you're going to accomplish, but within what time period. So you have an understanding of what amount you have to raise in terms of keeping the lights on and growing. And then thinking about at that point when we reach this from a company perspective, we'll also want to then start fundraising for that next milestone. So having that clear roadmap as well is very helpful in this context. I'll stop there and see if there's any questions or any thoughts.
Yeah, I have a couple follow-ups. One is around when you're thinking about how much runway uh, a round should give you, let's say like a pre-seed or a seed round. Is there sort of a well-accepted answer, or is it more really about the milestone, do you think?
So I definitely, the answer is always it depends, because every company has its own situation, but the standard timeline is typically 12 or 18 months, or 12, between 12 and 18 months. So that's kind of the standard of what you'll hear. However, you can be in a different situation and there might be something else. So even though I'm giving you these numbers, I'm saying like, I'll stick to what I said. Think about what makes sense to your business and what you're trying to do. If you're, for example, just turning on the lights and you're like stable at some point, then maybe you don't need to race so fast, but maybe you do. It really depends on what you're doing. But for sure, 12 and 8 to 18 months is kind of the standard.
Well, one thing that I really like about what you said was sort of almost turning the switch on in terms of like, am I bootstrapping or am I like hitting something that I need to raise for, right? I saw an interesting tweet yesterday. There's this company Retool, which if you are into dev tools or no code or low code at all, you know, it's just like exploding off the charts. I think they're raising at some crazy valuation. Like they just had like some two crazy raises back to back. But I saw something that like the founder actually scaled to 1 million in sales on his own before hiring anybody, or before hiring like a big team, or having the team explode, or having raised money. And I thought that was a really interesting case study in sort of, he was building the business like an indie business or like a bootstrap business until he was able to validate that the company was like had some growth potential, and then sort of flip the switch and was then able to raise. And it's also an example of founder-led sales, which I know you're a big fan of. So I just thought I'd call that out because that was an interesting tweet I saw yesterday.
Yeah, that's a really good point. And so I am a venture capitalist, but I will never say VC is the end all be all, because it's not. And it can be the right thing at different times of a company's life cycle. If you look at Calendly, I'm sure you've heard of the story. the guy like tried to raise VC and he just couldn't, but then he went on to build this really great business and has no VC funding. And so now he has all the equity. I think when you think about what you're trying to build and how you're trying to build it, it's a really important question to have. And I am also a scout for NDVC. So from that perspective, if you're coming at it from a, hey, right now I want to do my prototype, I want to start slow, I want to give myself some spacing. NDVC, for example, offers funding that's really VC alternative funding, where it's, hey, we give you basically a loan, right? Like the terms are, you get X amount of dollars, you have to return 3 times that amount, or you convert, there's like once you hit this threshold, you'll convert into equity. But it gives you a chance to really opt into keeping your equity. And so if you, for example, the terms is, if you take 50K, you have to pay 3 times that amount by paying 5% of your monthly revenue, because maybe that's what your business needs, that's what works for you. And then there's a trigger factor of once you hit that 1 million or maybe even 2 million valuation cap, that it converts into equity. But as you are paying your doing the rev share part of this, you're actually buying back the equity. And maybe that's something as a founder that you want to do. But there's so many different options. So it really comes back to, what do you want? What kind of business do you want to build? How do you want to build it now? And what capital makes the most sense for you?
Yeah, definitely. That seems like a great segue into the next slide, around sort of this spectrum of businesses and how they relate. There's like a bunch of different axes here, but is there anything sort of that you would highlight as a framework of thinking about when and how to make some of these decisions about different sort of fundraising instruments?
Yeah, and I'll just call out like what I've just been sharing. If you're more like, hey, I don't want anyone breathing down my neck and I don't have to be constantly fundraising, and you want to be more organic, it's probably going to be more of an SMB. But also the market, how big the market will also limit it. If it's below $1 billion, it's going to be an SMB. Like there's no possibility that really is going to be a good VC fundable, fit. The other thing is that again, you go back to equity and control, the ownership of the company. If you don't really want to give it up or give part of it in exchange for capital, that's going to be more of it an SMB. And that's where some of the vehicles like whether it's pitch competitions or grants, or even taking some angel money is helpful. But then when you look at the rocket ship side, right, where you're like, hey, I want to become this $1 billion company, I want to grow real fast, I don't care, I'm going to definitely give up equity and control, and at some point I'm going to exit, because that's an important, there's some folks who start their businesses and they're like, no, I don't want to ever give it up. And so between these two, the spectrum, if you think about it, between the SMB and the rocket ship, there's all these different kinds of capital vehicles that you have choices for. And I think, Rishi, you included the link to the article that this is part of, but you can see I actually created a chart where you can see the different investment vehicles that you can consider. And if you're more of that rocket ship, obviously VC is going to make more sense. If you're more of that SMB, it's going to be more of the, can you get a loan? Can you get a grant? Can you get, these kinds of things? But either way, you can start in one side and go to the next if the market that you're in isn't prohibitive, and if you want to go in that direction, right? So that's why one of the biggest questions in early stage investing is, how big is your market? To understand if you do need to pivot, that there's enough of a market for you to become this $1 billion valuation type of company.
Exactly. Yeah, and I'll share this deck in the Slack afterwards. Do you have an idea or of like, with the founders who you speak with and who you learn from, do you see any common threads in terms of maybe what shifts somebody's mindset from just like, hey, I'm going to explore this space, see what happens organically? Like, is there a wow moment or something that as a trend you realize across some population size of when people's mindset potentially shifts over to the right side of this graph?
Yeah, so one thing that I've definitely seen is this fascination with VC is end all be all. And if you get a VC funding, then it means that your startup is awesome and you're never going to fail. I don't know why, but there's this sort of perception of that that's what the cool kids do. And so I do spend some time, especially because I work very closely with the community of underestimated founders. There is a spread of folks who are not sure. Maybe I want to do more of a small business. Maybe I want to go and become a unicorn. And so one of the threads that I see is that people really need to figure it out within themselves as founders. What do I want? What kind of life do I want? Because it definitely determines if you're going to be, eating ramen and not sleeping on one side versus, it's a little bit more organic because you're on your own, or you have angels that are they just believed in you and they gave you checks, and so you have some time to grow. So some of the macro trends that I am seeing is that a lot of businesses are saying, you know what, maybe I do want alternative funding like in DVC. Because of a few reasons. One is sometimes because they really didn't know that this was an option and they're just like, wow, this is awesome. The other reason is because, like the founder of Calendly, they couldn't get VC funding because maybe their business ideas are not your status quo, or because they didn't go to Harvard and Stanford, because unfortunately there's a lot of bias in this industry, which is one thing that I'm really trying to push for. You don't need to come from specific backgrounds to build really great companies. So those are some of the things that I've seen in terms of the underestimated founder community. Here's one thing I'll say is that I do find founders who want to go raise without having thought about these things. And they're such reflective questions, especially when you're at the beginning and you're setting the foundations. I talked to Kieran today early in the morning, and he was telling me about what's important to him about building the team and the integrity and the values and all of this. And what you choose can really influence what kind of culture you'll have. And so being really thoughtful, stepping back and just saying, hey, who am I? What's important to me? And what kind of company do I want to build? And what company can I build, right? Because we know there's the market threshold. And then after knowing what it is, what kind of business, to then understand what your options are and then go and explore them. And VC is one of many.
Definitely. Moving forward a little bit, thinking about like the actual investor selection and of all of the capital that is now out there, right? There's this sense, at least in the market, that there's a lot of capital out there waiting to find the right founders. How would you advise or frame that search of finding the right partners, especially for founders who maybe have a little bit of optionality, especially in those sorts of situations?
Sure. So, this is a privileged conversation and question, actually, because there are folks who are just like, look, whoever I can get money, that's what I need to do. So I'm always a big believer, like, you've got to do what you've got to do. But if you have an option, for me, one thing that's really important is just get to know people as people. All investors are human beings, and some of us are assholes and some of us are more aligned with values that you have. And I really think that if you look at us as equals and as humans, you'll start to like think about, do I want this person to be in my life for 7+ years? Because there's a stat that says, like, literally your relationship with your VC is likely to outlast the average length of a marriage in the US, which is around 7 years. So being able to have the opportunity to meet investors as humans, understanding their values, are they aligned with yours? All that stuff is really, really important in my book, because you want someone who's going to be a good human in the good and the bad times, because there's going to be a lot of those ups and downs. Before that, though, I would say doing your homework and creating a target list. So everybody knows, I just shared it at the beginning of the call, that my background is sales and I do sales and I love sales. And fundraising is a big sales activity where you have to have a target list. You have to have like your strategy, and then you have to go after them and see who you can close, right? And the difference with fundraising is, well, what are some of these levers of how you build your list and what's in it? So typically these levers have to be, well, what stage VCs are investing in? Are there particular sectors? Are there particular geographies? Are there particular check sizes? Do they have some investors have caps? So they'll say, like, if the valuation is above this, I'm not going to do it, especially in early stage, like pre-seed seed. So you have to look at these different categories and ask yourself, which investors out there fit who my company is? So that you don't waste your time. So you can do this research on Crunchbase, I really like NFX Signal, their database, but you have to build your list one way or another, right? And so you build your list, and you may actually just know as far as like what the fund focuses on, and then it goes into like really pay attention to within that fund who's going to make most sense, who's crazy about the space that you're a part of, not just because you want to target the right person to sell to, right, to invest in you, but also because honestly, at the end of the day, if you just get capital, that's great. But even better is when you can get capital and you can have an additional human being that's added to your team in one way or another. Can they help you with recruiting? Can they help you with strategy? Can they help you with distribution? Can they help you help make introductions for new sales? What else can they add to your company and to you? In terms of that funding. So you take that structure, right? So you make sure you have the right kind of funds that match where you are with your startup and what you want to do. Then you look at the individual investors and you see how they can help you. And then that's really when you're able to really focus and have that ideal match. Now, I'm talking about like in an ideal world, this is what happens, and then you end up with like the perfect match. However, things can get really messy, and some of this information is not out there, so you might have to spend time. But this is probably the most efficient way to not waste time, because you would have done some pre-work that allows you to, not waste time talking to investors that are just not a good fit. I can tell you on a day-to-day basis, I get pitches from all types. And I'm just like, how did they think that this was something even remotely interesting, or that I even know anything about? Because also on the investor side, ideally, I want to also add value, not just sign a check. So these are some of the steps that I would suggest. Let me pause there and see if there's anyone who has any questions. Maybe folks have already started creating investor target lists.
One thing I do want to call out is I think this is such an important point, right? Or it's like it's not just the capital that's coming in; it's also sort of the strategic advice and domain expertise, etc. I guess just two quick follow-ups. One, I just posted a link in the Slack channel to a session that my former boss Steve Schlafman did on sort of building an investment pipeline, right? And the strategies for founders, and he has like this cute Notion template that I made. So I linked that, and I think Lolita also has some templates later, and also this incredible like fundraising matching tool that I'm sure she'll talk about and plug towards the end as we get into that part of the conversation. So just wanted to call that out. And then one thing around this second point around individual investors within a fund, I'm not sure if you have any insight on, but one thing that I've at least heard or seen is that within some of these what you might call platform funds, right, where there's these multi-stage funds that sort of want to either keep up their parada or double down sort of over the course of growth of a company. Like when you get introduced to someone at those funds, it's very important that you get introduced to the right person, because there's competition within those funds for partners or different investors to be sort of where that deal came from. So how would you go about making sure how that introduction happens, or like what paths of making those either introductions or just like outreach to the right person, because you're playing this balance, right, where you're like, I'm just going to throw the name of a firm out because one of my friends works there. Like, if I want to talk to somebody at Bessemer, right, how do I make sure that I get to the right partner? But I also like, I just want to be able to talk to somebody there, right? So how do you how do you see that game being played successfully potentially? I guess you.
Yeah, so I honestly think that part of it falls on the side of the venture capital fund. So I'll tell you, like for example, at the community fund, there's 13 of us, and what we've done is we've tried to be very transparent, and we've been as transparent as we can in terms of who works in what sector, what expertise level everybody has in what areas, what skill sets, what's interesting to them from an investment perspective, so that when you come to our website or you're submitting your company for, if you are a community driven company and you're submitting to us, you actually can select the investment partner that makes the most sense. There is a company, for example, that submitted, they're community driven, but they're all about like a barbershop related. And I don't know anything. I mean, I know how to go get my hair cut, but that's just about it. But we have the co-founders of Squire, who are part of the investment partner team. And when I looked at it, I was just like, you should have probably selected them. On the flip side, though, what we've done internally is that whenever someone submits, there's someone that gets called out in the application, but we all see all of the submissions. So we're trying to make it easier, and I think funds should make it easier for you to learn about who the individual investors are, and then it's kind of on you also to do some homework and research. A lot of folks, especially because there's this whole macro trend of building in public and building brands and that being a big differentiator, that people are really putting out a lot of their information out there. So the best hack is to literally just sit down and see if you can stock all of the investors online and then align, right? And to that end, the best way to start seeing like what's going on is they're probably on Twitter. So what are they tweeting about? Can they be helpful? Can you start asking them questions? Can you just say, hey, I'm not raising, like Kieran, he's so smart. I love it. Like that's why I took a call with him, because he's like, I'm not raising right now, but I have something really interesting in building. And I love building relationships with people. It may not be that all VCs will say yes or even respond to your DMs or your emails, but it's a great way of you just keeping your feelers out. Maybe you use Google Alerts, or maybe you follow and get notifications on Twitter or whatever it is. If you've done a good job of doing your target list and then you're scoping out, continuing to track activity from these funds and these investors, you'll quickly start to see, not all, because not everybody's on Twitter, I get it. But most of the time you'll find something, whether it's a podcast, a Medium post, something that can be really helpful. And that's what I would say. And to that end, like if you do find someone who you're like, hey, maybe this could be something that could work out in the future, always asking to connect before you're raising is really better, because think about it this way. I know Rishi called this like picking the right dating partner or whatever, but you literally at some point you sign documents that bind your relationship for a while, right? So you don't want to do that. I don't feel comfortable like someone just comes at me and they're like, invest in my company. And I'm like, I don't know you. But if they come at me and they're just like, hey, I know that you're in the space and I am in too, and I think you can help me this way. I have a question. And, then we start a relationship. That's how I've funded, several companies this year, in fact. And that's how it starts, I think. But you have to do the homework. And I don't think there's a way about it, where you skip that research and that little bit of stalking.
Amazing. It looks like we have a couple questions coming into the Slack, but we just have one
Sure.
slide left. So maybe we tackle that and then we open it up.
Okay.
Awesome. Um, yeah, I think this is more maybe about like we talked a lot about sort of how do you build relationships, what do you look for, but then when you actually have a meeting, how does that relationship develop potentially after the meeting, regardless of maybe whether it goes well or not?
Yeah. So there are companies, for example, that I keep a close eye on, and we've started a relationship. But it was just too early for me to invest in, or there's a mandate that requires certain traction or whatever it may be from my side, and I'm just like, look, can you add me to your newsletter, your update newsletter. And that's one of the best ways and easiest way from both sides, the founder and the investor, to keep in touch and keep on the same page in terms of if there was a concern about something, or if I'm just meeting you. Like, one of my biggest values is integrity of your word. So if you say you're going to do something, you actually do it. And to me, I really like to see that quality in founders that I work with and I invest in. And so, for example, if we have a conversation and you say, hey, I'm still early, I'm working on this, but here's my goal between here and here, we're going to do this. And then I start seeing these newsletter updates and it's showing that it's tracking that way. That's amazing, because it's funny, but you think everybody does what they say they're going to do, but it doesn't happen as often. And so that's really impressive to me. And it's really simple on your side, because as you're prospecting, right, because you're doing the sales funnel, you can just add people on the list that might have been interested, like, or wherever the conversation landed, you could say, hey, can I add you to my update newsletter? And keep you on top of like where we're at, how we're moving forward, and then maybe engage later. And I think it's great, because I feel like I'm building a relationship with someone without it having to be, we have a weekly call or something like that. So that's one way of doing it for sure. And it also keeps you organized in terms of like, what metrics are you personally following? And that's another thing I'll say, like in the newsletter, there's different types of formats. The most important to me is always, if a founder says, here's the metrics that are most important for our success, for us to get us from this point to that point, and so on and so forth. And they specify the metrics and they say, here's where we're going to go. And then they do it. That's so impressive to me. Also, having an ask section. So I don't like founders that know it all and don't need help from anybody. We all do. And so I love when founders will literally say, hey, can you help me with this? Can you help me? Like, as specific as possible, to make it super easy for the person who's consuming this content to just say, hey, I know this person, let me do a double opt-in, or whatever that may be. So that's a really easy way to then, start a relationship that's super, that can be helpful across many of the people you're prospecting. And then we talked a little bit about social media and stalking people. If people have open DMs, look at that as an invitation of, yes, please DM me. And it is part of our jobs to sort through and get to as many people as we can. If you don't hear back and you only touched people once, it's like sales, right? You need so many touch points sometimes. Not so much because maybe they didn't like you, maybe they didn't have time, maybe they had to go to the doctor, and then you know how DMs, you can't like put them as unread. Maybe they just fell through the cracks and you just have to, try a couple different points and try to interact as best as you can. Maybe they're on Instagram because you're a D2C company. Maybe they're, whatever you're thinking of, like, how can you start building a relationship that's not creepy, but you're sharing what you're doing and you're allowing them to see you. The bonus is when you can actually add value to this human being. So one thing that across the board all investors want is deal flow. So for example, if you know of a company that really fits somebody's thesis, and you're just like, look, I'm still working on this, but look, I understand where you're coming from. I understand your value. That's why here's a company for you to take a look at. That's something that's very valuable, because to Rishi's point, there's attribution, sometimes wars and these multi-level super big funds. For us, like a micro fund, we're just like, whatever, we're an and type of company, we're an and type of fund. But some of these firms are just like, if we're leading, we want to make sure that, you're either going to take Sequoia or Andreessen. You're not going to take, so there's this competition stuff, but as much as you can be of added value, maybe it's not that, maybe it's just an article that you saw and they had mentioned something and it was interesting to them. Whatever it is, that could be really helpful and start a more authentic relationship. And that's super key. Like, if you guys don't feel it, don't do it, because you know how you can just smell BS from like really far away. It's really obvious when you're just like, I'm trying to build a relationship so then I can ask you for funding. Like, I can't tell you how many emails and DMs I get where it's like, hi, how are you? You're so wonderful. Will you invest in my company? And I'm just like, not exactly the best way of building a relationship, but I do try to practice empathy, because sometimes, especially when we're doing things the first time, like we don't really quite know. But just think about, like, put yourself in an investor seat and as a human being and be like, would I like this? What would work out this way? And then the other thing is that most investors won't give you feedback. And that's really hard to take. I know I try to give as much feedback, but it's just not possible, because otherwise we would not be able to live our lives at all. But so these micro interactions, whether it be in DM, retweeting, resharing, or sharing a link, or sharing a deal, or sharing something, that all of a sudden is like a low touch, but the consistency of it builds a relationship. So those are some ideas. And now with events too, I'll just touch on that in the last point. One thing that's happening with events is you have these cocktail hours or these icebreaker events where you just go and you do like these speed dating type of conversations. There's investors, there's speakers who go into these cycles, and that's a great opportunity to also get FaceTime with folks when we're working from home and you don't have that access. Also, if you yourself are able to get on a panel where there happens to be an investor that you really like, that's also a really great opportunity, because oftentimes when you have to do panels or whatnot, you have to prepare for them. And so you probably have to have a call. And so again, there's these multiple touch points where they see your face and you're no longer a stranger. And especially if you can be on a panel or you write about people or things like that, it just starts to make it like, oh, I know Gideon. I see him all the time. Oh yeah, Trip? Yeah, totally. I saw him tweeting about the turkey he's making. He really likes to deep fry it. And then it becomes not just about your business, but also as you as a human, which is really nice. Trip likes the fried turkey. I do too, but they're really dangerous, guys. Be safe. Okay. Yeah, so hopefully that gives you some ideas. There's no silver bullets. It's just like, what's your personality? Be authentic, and just remember, all of us just want to have good relationships. Though I will say, in competitive deals, people do shady shit. Investors sometimes just want to get in and they'll like, beware. But you guys are all like smart adults. So that I think I'll stop there, because I get excited to talk about these things.
Yeah, no worries. I want to make sure that we get some time in for the questions that are rolling in. Jeeves, did you want to hop on? I think you had one. Yeah.
Oh yeah, sure thing, man. Thanks, Rishi. Hi, Leah. It's been ages. I'm sure you remember me from Twitter. I know you're ex Backstage as well, and I currently work for a digital marketing agency, and 3 of my clients have actually capital portfolio companies.
Awesome.
Yeah, it's good. It's good. My question is as follows. I'm not currently fundraising, and I don't think I'll build a venture backable business. I'm probably going to take a different route, but I'm very curious about community building and what makes it quite unique, and in particular in your thesis. So my question is as follows: what are the KPI benchmarks of a community first business that's venture backable at pre-seed and seed? In particular, I'm interested in your investment matrix and how you formulate that, and what's the rationale between that.
I mean, such a simple question, right, everybody? Like, that was no. I wrote 2 posts, and I'm going to share it because I probably can't cover all of that material without going into. Let me see. So I'm going to share 2 links. Or Rishi, I'll share it in the Zoom chat, and then if you want to, or I'll send it to you directly.
Perfect. Yeah, that works. And I'll just paste these over to Slack where everybody can.
Yeah. So there's two questions I think you asked, and you're like, okay, how do we build this community driven company? And the second one is, how does this thesis work out? And maybe even furthermore, like, what is the sourcing, selecting, and that kind of information that you might want to get. So I'm going to send both of these links so you can get all that information that you want. In terms of what are these metrics that we're looking for? There's actually a playbook we're going to be releasing soon. And I've been collaborating with Flybridge, and so you'll have more of that detail. There's even formulas and stuff like that. But at the end of the day, here's the thesis is around being able to reduce things like customer acquisition cost, right? Because think about it, if we're all excited about Peloton and we're telling all of our friends you have to get a Peloton, then all of a sudden it's just like free marketing that's happening, right? So you have this lower CAC. The other thing is retention. So as soon as you build community and you have like a family that you want to come back to, you want to serve, and they're helping you and you're helping them, there's a stickiness factor. So when you think about growth and retention, you're also balancing out the retention piece. And then the stickiness factor, right? It's a lot harder to replicate a group of people who have a bond than to just say, here's an off-the-shelf product. And so we actually see it as a differentiation moat that impacts a lot of different metrics. So I mentioned, retention. We also believe because of the dynamics, we do believe that lifetime value of a customer will also increase because you have people fostering this relationship and stickiness. And then margins ultimately. The other thing is when you have a community, say you want to recruit talent, you also now have a community that knows your stuff, knows your values, and you bring it in. Some of the core elements that we really believe a community has is a mission. Like there's mission alignment, there's values alignment. And so it's just like literally you're building a family, like a tribe. I think in the US, we're very individualistic, and I'm Mexican American, and we do everything community. So sometimes it's odd when someone's like, so tell me, when did you start believing in the thesis of community? And I'm like, honestly, that's how we survived. Like sometimes we didn't have food, and it was because the community was like, here's some rice or here's, whatever. That's how we made it happen. And so to me, it's like it's just part of my life. But yeah, anyway, I'll stop there. There's lots of different elements. And in the posts that I just shared with Rishi, you can see a little bit more of that, and then more to come in terms of an actual community driven company playbook. There's a couple of books out there that are really good. Get Together by Bailey Richardson, as well as People Powered by John O. Bacon. Get Together is more of that grassroots, like what does it mean to build a community? And it's her thesis is really around like you don't actually go out and build community, you actually just create a space and you create structure for a community that exists. John O. Bacon is more of like your technical, like what are these technical steps within a company? So depending on where your interest may lie, you may want to take a look at one of those books.
Nice. I appreciate that. Thanks so much. I look forward to the playbook as well. Rishi, it's back to you.
Yeah, of course. Appreciate it, Jeeves. Always a pleasure. Trip, you had a question as well, and then we can go to Brian.
Yeah, thanks. And fried turkey is definitely the only way to go. I'm from Alabama originally, so there's no option here. So yeah, would love to understand. We would love to build community into our product and make it quite central to our business. And we're trying to think about, do we try to house that directly into the product itself? Do we put it somewhere else, like a Facebook or a Slack or something like that? So would love your perspective on the pros and cons of each approach and how you've seen folks do it well.
Yeah, and this is such a great question, and the answer it will be it depends. But I can tell you my perspective. We're not saying every company has to have community. Let me just say that as a disclaimer. Not every company has to have a community-driven company in order to be successful. We're not saying that. We're just saying that for again, it's even like going back to the question of how do we know what fundraising vehicle we choose? It's kind of that sort of same thing. Is community something that to you, like it's a values thing, it's a mission thing. So if you have a vision, a mission, and you have and that mission takes a community, and you want to bring in the community, and you personally think it makes sense to bring them in for whatever reason, and I don't know anything about your business, then I'd say explore making it. And it can be as simple as a Facebook. I mean, Peloton's community is on Facebook. It doesn't have to be like, I created our own platform and this is all it is. We've made, actually, we're going on 4 investments, and we've been around for 2 months-ish. And we have one startup that their product is the community. So it is like, they have to have it. We have another company that's more of a platform that allows community to take part within their platform. And then we have a community that has a Facebook group. So the communities can look very different, and I think it just comes down to what makes most sense. Some people are more Instagram and Facebook, some people are more Twitter or LinkedIn, or some people are TikTok. I mean, I don't, it's so contingent on what feels right to you. But what I would go back to is asking yourself, what's your mission? And if you are considering a community, why? Why do you want this? And I do have a personal opinion on that. If you are going to be community driven, that it can't just be a marketing thing. There's people on my team that are just like, it's cool, they still have the community. I'm just like, no, because like, if it's about community, then it has to be core to one of the founders. And for it to be a top to bottom type of approach, so there's sustainability and the values alignment is there, and so on and so forth. But that's my personal opinion. There's no specific, here's the recipe of how to do it. It's more of like what works best for you. So hopefully that gives you some perspective. I'd have to know more to give you more of a customized answer.
Yeah, and Trip, maybe to give you a sneak peek into On Deck, right? Like, we have the Slack, and then we also have the directory. But if you, or I guess maybe this is maybe I'm spilling some trade secrets here, but essentially, if you notice the things that get built into the directory, it's actually just the features of Slack that we feel that we're outgrowing, that we feel are valuable to the community. For example, there may have been a day in which, instead of having like the session recordings on the directory itself, there might have been a channel where we were posting links to Google Drive, right? And we realized that, well, people feel that these are really high value. These add value to the community. It's part of our shared mission that people want to be able to learn and be educated on the different aspects of starting a company. And so then it makes sense for us to then go create the directory, where now you can look people up within the community, because Slack's directory feature isn't very good. And now you can also go watch the sessions and have those be searchable, et cetera. So a lot of the features that you might see sort of even coming forward, sort of as you guys stay engaged, even past sort of that end date of your cohort, like I anticipate that you'll notice that the features that we build are things that you felt that were valuable in Slack, and it's really adapted. Our platform is being adapted to the needs and the value that we can provide to sort of our members, which is you guys.
Yeah, and I love On Deck as a community-driven company, right? Because think about it, they're listening to your needs, and you have a space for where you can create value for each other. So it shouldn't be like one directional, like here, let me push stuff to you. But you guys have a space where we're coming together, we're talking. You guys are asking questions, and maybe one of you had the same question but didn't ask it. And so you have this community that now you can depend on. And because everyone came here with a particular mission, there's this bond that happens. And I think On Deck has been so good at this. I've been really impressed with there's an affinity to On Deck. And why is that? Right. And I think a lot of it comes back to, is a problem being solved, or is something helping you achieve a goal and move you forward? And when a company is able to produce that impact, but at the same time allow for its members to make that happen within themselves, then there's this like amplification, multiple effects that happens as well.
Exactly. We like to say we just make a room for all the brightest and most ambitious people, and then we get out of their way. So it's kind of that making argument that you talked about earlier. I do want to make sure, since we're running up on time, that Brian gets his question in. And as he's asking, I'm just going to also drop the feedback form for today. But yeah, Brian, all yours.
Awesome. Thanks. So my question is based around, do you think that the community building part of a business can happen as a network effect of the larger operational, I guess, functionality? An example is, we're building a private real estate marketplace that is designed to help sellers of banged up homes, distressed, outdated homes, to sell those properties in a much easier manner than they can normally. The investors on the back side of that already have a lot of community that exists on Facebook and this, that, the other, where they share tips and tricks. What part of what we're trying to do is bring those people together, but it's not going to happen day one because of the nature of building out a marketplace. That as we get more people in the marketplace, we can then roll out those features. It's a goal, but it's not necessarily going to happen day one. It might be day 100.
And so can you come back to your question again?
Yeah. So the question is, do you think that in your mind, as a community-driven company, if you know that that is part of your roadmap, but it's not part of your immediate rollout because it just can't be yet,
Yeah.
is that still cool?
I mean, if it's working, yeah. I think, and that's the thing, building communities is a one step at a time thing. And it ultimately, if you're building a community and leveraging community as your differentiator, that's one thing, as opposed to thinking, hey, I have a community and the community is my business, unless it is actually your business. And a marketplace, I guess I can see how it can get confusing. But just know that there's a difference. Like there's the community aspect and you take care of it. And I love what Rishi said about like, let's get really awesome people together and then we create structure and then it gets going. And then it's kind of like, let's get out of the way of really smart people. As opposed to just being there all the time. So I also think like for you that you have two sides. I'll go back to the Airbnb example. When they were getting started, especially they put a lot of effort in creating a community for their hosts, but also for a community for people who were using their platform. And then it evolved. And so again, there's no silver bullet in terms of like have this community this way and have this one the other. If you go back to what I said about what Bailey's thesis is, and I really believe this, is there's a community there and you're just actually creating a space for it to come together, maybe giving it some structure so it can run smoothly and energy flows can just happen. It becomes a lot easier. But I would say keep in mind, like, what is the ultimate goal? Like what milestone are you driving to? And when is the right timing relative to your resources and time to devote to that? But already you having one side of it be a community it's a powerful differentiator, because again, it's hard to replicate these kinds of things.
Okay, thanks.
Definitely. I want to be respectful of everybody's time, and I know we're at the top of the hour, but I just wanted to say thank you so much, Lolita, for coming through and chatting with everybody today.
Thank you so much, Rishi, and thank you everybody for making some time.